Time for the word on Wall Street this morning. Top investors watching your money. Joining me right now is Michael Lee strategy founder Michael Lee, Mahoney Asset Management CEO Ken Mahoney, and it's great to see you gentlemen this morning. Thank you so much for being here. Mike, kicking things off with you. House Democrats are set to propose raising the corporate tax to 26.5%, up from 21%. They also want to raise the top capital gains tax rate as well to 28.8%. But of course, the highest earners will see a cap gains tax of 43.4%. These increases would be part of the House Democrats' plan to pay for their massive spending bill. Do you believe this goes through, and what's the impact on stocks?
Well, first of all, I think Joe Manchin's made it clear that a lot of the stuff is dead on arrival. And if he's writing an op-ed in the Wall Street Journal saying we should take a pause, there's probably at least a half a dozen other Democrat senators that don't want to put their name on it but are not in favor of this, similar to John McCain and Obamacare. I think anybody who thinks that it's good for the economy or good for the country to raise taxes, I just asked you a question. Where do you think capital grows quicker, in the public sector or the private sector? And if you think capital grows quicker in the public sector, there's an island with 12 bridges around it I'd like to sell you. So all of this is to game Congressional Budget Office scoring. And the allegedly nonpartisan Congressional Budget Office is one of the least accurate forecasters and predictors that rivals even the worst analysts on Wall Street. So it's all a game now, and in the end, it's about greater government and control. And what you're about to hear from the Democrats and from everybody, all the talking heads, is everyone's got to pay their fair share. Everyone's got to pay their fair share. Meanwhile, people like Jeff Bezos don't pay a dime of income taxes. So it doesn't really address any of the problems. It's all a game, and hopefully Joe Manchin will stick to his guns along with the other Democrat senators that are not on board with the spending, and this stuff dies.
Yeah, so it sounds like you don't see a big impact, certainly if Joe Manchin holds the line. Ken, last week we told our audience that Joe Biden had a 90-minute conversation with Xi Jinping. The origins of COVID never came up, Ken, unfortunately. I want to talk about China, and what's impactful for markets right now is China's big crackdown on business. Now, Chinese Minister of Industry and Information Technology says that the country's electric vehicle sector is becoming too bloated, and Beijing will encourage consolidation. You know what that means. This as China is reportedly looking at breaking up Alipay, a division of the Ant Group. Beijing planning to create a separate app for the company's loan business, according to a new report from the Financial Times. Ken, the crackdown from the CCP continues, and that certainly has impacted a number of investments in these companies. Your thoughts?
Well, as my blood pressure goes up and all what you said, I want to wish you a belated happy birthday, Maria. Let's start there. 29, I think it was yesterday, right?
Yeah.
So, look,
that's
300 EV companies that are out there. And of course, on the surface, it makes sense. There's too many. There's not enough demand. There's 53% capacity. Heck, you have Tesla here, over 100% capacity. So we know that, again, charging stations all make sense. On the surface, the news relief all makes sense. But we know it's a power grab. We know it's going to go from private hands to public hands. And for Xi, it's my way or the highway. And you see that,
that's right.
Those companies, you see that here. And as far as you mentioned financial end, gosh, they're going to take personal data. First of all, we have Big Brother here in the U.S., take Big Brother times 10 in China, and they're going to collect this data from their citizens. That is not a good spot. And at the end of the day, I think I go back to the Dr. Seuss metaphor where he says, I say, you should not touch Chinese stocks with a 39.5-foot pole. This is getting insane. This is definitely and it's going from private companies, 300, and you're going to watch. They're going to wheedle their way into it just like they do in every sector. This is a very scary moment, quite frankly, for what's happening.
It is, and I agree with you. You know how I feel about this. We've been on this subject for years now, and the CCP is only getting more inward and more communist every day. You've got to be very careful. If you're going into China to invest in these companies, it's all operated and owned by the CCP. I want to bring in eShares CEO Joel Schulman, also joining us this morning. And Joel, I want to get your take on inflation. Great to see you. The Consumer Price Index is out tomorrow. It comes as Kroger says grocery prices will continue to rise. Joel, what's your take on inflation right now? Should investors be more concerned than the Federal Reserve and the federal government are letting on? They keep calling this transitory, but we keep seeing numbers get worse and hotter, more expensive for everyday items.
Yeah, you're absolutely right. I mean, we're looking at inflation that was running year over year, based on August numbers, 8%, 8.3%. I mean, Kroger mentioned food prices are going up. We've got wages going up. We've got a lot of concerns here, although COVID, it may put a damper in terms of some of the growth we've had. We've got to remember that this has been a very strong market. So while in general, I'm concerned about inflation picking up more than the Fed, they'll probably start tapering. We'll find out tomorrow. Tomorrow's numbers will be very key. And if they come in hot, they're going to start tapering sooner rather than later. They start tapering, it will take a little steam out of the engine. But, this is a strong year. I mean, we've only had a few of these years in the last 30 where we've up over 20% by the end of August. And generally those years end well. So I wouldn't encourage investors to panic because normally, I mean, if we look back at a similar year, 1991, they had similar position coming off a 1990 recession. The inflation is a little different, but, still is relatively low by historical standards. And the year ended up, another 10% higher from, the end of August to the end of the year. So generally speaking, years like this, most of the time are pretty good.
Okay. Well, it's certainly been pretty good so far. We're talking about double-digit gains for the major averages year to date. Gentlemen, I missed you. I'm happy to see all of you this morning. Michael Lee, Ken Mahoney, please come back soon. Great to see you this morning. Thank you for the word on Wall Street. Joel Schulman, great to be with you. You're going to be with us for the rest of the morning. We appreciate that. We'll slip in a quick break. Thank you, gentlemen. Much more ahead this morning.